Are we live? I believe so. Welcome back, everyone, to the Prospero.Ai stock market live stream. I am your host, Steven, and I'm going to be taking you through some of the topics that we're going to discuss today. As everyone rolls into the stream, be sure to like it up. We have a bunch of great topics to get to. The markets are up slightly today, kind of continuing this trend we've been seeing recently, where that volatility we were expecting and experiencing has kind of fled the markets. These overall moves in the indices are kind of subdued recently. I feel like we've had a lot of under 0.5% moves in the overall market, but some stocks are moving under the hood. And one of them we want to talk about today is Nike, which actually reported earnings. It's kind of the first stock to kick off the next round of earnings season. A lot more will come out over the coming weeks. But Nike stock was down. They have a new CEO, new strategy. He pulled the full year guidance, kind of spooked investors. So we'll kind of talk about why a new CEO might want to completely change the regime of a company and kind of get all the bad news out of the way up front. And if that's what happened with Nike stock. Then we have Tesla, which barely, ever so slightly, missed vehicle deliveries and it weighed on the stock a decent amount. It was down, I believe, as much as 4% today. And in preparation for this story, I was flipping through a lot of the car companies that are public, thinking Ford, Toyota, Hyundai, obviously Tesla. And a lot of them have either struggled recently or just not, reached all-time highs. And then there's one stock that has made a crazy move that's kind of relating to this industry. It's up over 200% this year. I'm going to make you guys wait until we talk about it with George to find out what that stock is if you don't know already. But I'm wondering how that's able to happen because with those stocks struggling and this stock ripping, it seems like something's off somewhere. So we'll discuss. And then we have a few stories in the AI industry. If you're a regular viewer of the stream, you probably heard us criticize Google's ability to productize their AI, even though they seemingly have the best tech. Seems like they're getting that message, and they just made an acquisition of a company called Character.Ai, which is actually founded by someone who used to be working in Google's DeepMind unit. He left there back in October of 2021, but he is back. So it seems like Google is committing to getting their AI products right. And in that same vein, we have OpenAI closing their funding round. Their valuation is 157 billion. When we discuss the story later, I'll let you know all the details about the revenue that they're expecting this year, next year, how their valuation has grown since last year, all the ins and outs of their business. They're actually expected to lose a large amount of money this year. So we'll get into all those details and we'll talk about what OpenAI has meant for the AI industry, the stock market, and the next company actually banned ChatGPT use within their employer base, and that would be Amazon, which created their own chatbot. And we'll discuss kind of the ability of OpenAI, Microsoft maybe, to use the data that's collected within ChatGPT, and if that's possible, if Amazon is kind of right for being nervous about this, or if they're just being over anxious about it. Um, but yeah, we'll get into that story. And then we have another story about cars, but this car company isn't building cars that are going to drive on the road. They're building cars that are going to fly in the skies. Joby Aviation stock was up over 25% today. It's one of those companies that went public in the SPAC craze a few years ago. I wonder if you guys are remembering it, but they just got $500 million investment from Toyota, which sent the stock higher. Toyota now owns a large percentage of that company. So I guess Toyota believes we're going to have flying cars one day. We'll talk about it all later on. But that's all of our stories for today. So we'll wait for George to get in here, and I'll fill you guys in on the QQQ and SPY net options sentiment. As always, if you have any questions throughout the stream, feel free to enter them into the comments, and I will read them out for George to answer. But let's look at the QQQ as we are waiting here. I see over 40 people joined the stream already just for me, so thank you guys. Okay, so we have QQQ reading 52 in net options sentiment level right now, which is slightly higher than it was at past couple days in the high 40s, hitting 49, but slightly lower than it's been over the past weeks. It was in the upper 50s and even crossed the 60 mark. So tough market to read right now, one way or the other, kind of right in the middle. And let's look at the SPY, which is when we've looked at it recently, the SPY net option sentiment has been lower than the QQQ, about 10 to 15 points. So we'll check and see if that is remaining to be the case. Looks like it. SPY is at 43, which is also recovering. It was in the high 30s just yesterday. So slight recovery, but similar to the QQQ, not at the levels that we were seeing over the past couple of weeks. So we'll have to keep our eyes on both of them and get George's answer for which direction is this market headed. We're still firmly in the volatility period before the, obviously, elections are weighing heavily on the markets. At least we're through the month of September, which historically is a pretty bad performer for the stock market. But it didn't seem like the calendar turnover did too much to help us as we were down yesterday. But I saw a post on Twitter that I think the last 4 months, every start to the month has been down, and then the market's recovered throughout it. So maybe we're headed for that type of dynamic this month as well. I'm curious. So we have 55 people in the stream right now. I want to see who in the stream uses Prospero on a daily basis. Comment yes or no right now. I want to see some answers. I'm wondering if you guys get value from our signal so much that you open the app every single day. So comment right now, and let's see who does. All right, I'm checking in on YouTube as well as Twitter. Sawspot, good to see you in the stream. He says, or he or she, I actually don't know. He says, yes. Jonathan, yes. Another familiar name. David, another familiar name. Oh, all the regulars say yes. That's good. So that means if I see these people in here commenting often and you use the app, you must like it because you guys come back and continue to watch and use the app. So David, mostly do research on potential acquisitions. Interesting. Can you elaborate on that a bit? I'm curious how that actually affects your trading or acquisitions. Are you talking about like acquiring businesses or just investing? I wish I had the time to look at it every day. Chris is a busy guy, huh? What do you do, Chris? I think I remember you commenting something in a prior stream that was it made me interested to hear about what you do. You seem knowledgeable. I think in cybersecurity maybe or something. Hey George, welcome to the stream.
Sorry, I was having some camera focus issues.
No problem. I've just been chilling here with the chat. I got a bunch of people to say that they use our app every day, so that was cool to see. But let me just tee you up on the market, because although all the markets are up slightly today, it is seemingly not making a decision on which way it wants to go. We've been talking about and covering how we expect volatility, and we've seen it in the past months of these dips that kind of get bought up instantly. And now in the past couple trading days, I feel like the market kind of just, I mean, I guess yesterday was a bigger down day, but most of the moves are kind of relatively small. So how does that make you feel? Does it change your outlook? What is the market waiting for? There's a lot going on in the world, and then obviously the port strike in the U.S. Does this strength in the market and the resilience surprise you at all? How are you feeling?
I mean, the big thing is what we would expect is volatility, right? I think that's the one thing that we've kind of said consistently in this market. So instead of saying like, the market's up, down, what have you, like I kind of think that it's just been one kind of market essentially, and that's a volatile market. And I think we're going to see, kind of like we saw a pretty big reaction to the, yesterday and into the news, and then kind of just like very quickly kind of swinging back the other way because we're seeing a volatile, like unsure market. And I just think that, that's kind of what we can expect and what makes this market such a hard market to read. And I mean, even with some of the adjustments we made, right? We were, kind of changing our allocations, doing things like that. Um, and yeah, it wasn't necessarily the adjustments we wanted. Is it looking slow to you, Stephen? I think that might be.
Yeah, I was gonna wait for you to stop to say that, but yeah, the picture is clear, the sound is good, but it's like the frame rate or something is not looking right to me right now.
I can try a quick. I don't know what happens with this computer sometimes. Like I have it, and basically the I'm just gonna come back. I'm gonna come
All
right
right.
back to everyone for the difficulties today. I'm gonna restart my computer.
Yep. We'll see you in a minute. I see David answered. I look at net option sentiment history just for my portfolio. Yeah, it's always good to look at that. I love looking at the time series graph um, of all the stocks that we are tracking. Sorry for the delay of getting into the topics today, but you'll be stuck here with me for just a moment as George, hopefully his computer, when he joins back in, the picture will be crystal clear. It was crystal clear. I guess the frame, something was wrong with the frames, but we're going to talk about when he comes back Nike stock. So if you're a Nike stock holder, you'll probably want to hear the next topic, or maybe it'll be time for, if you're not a Nike stock holder, to get involved in the stock because Nike is at, let me pull it up and take a look. I believe it's at a multi-year low, if not just well, it did recover slightly from its true bottom, but let's take a look. So this year, year to date, Nike is down 22% right now. At the bottom, it was down 34%, $71. It's currently at 83. It's actually down over the past 5 years, 10%. It was as high as 180 about. So trading at a severe discount from where it's been at the heights of the past 5 years. Maybe it's kind of, you know what? Looking at its stock chart is kind of reminding me of a stock like Disney that, everybody said it had value for so long, but it's just like over such a long timeline now, like 10 years, it's kind of just a nothing. So I guess those are the two camps you can be in with Nike stock. You could think it's at a discount and it's going to go back up quickly from here, or it's going to follow the Disney path and continue to just trade sideways for a while. So it's funny. I didn't even think about that before, but I'm going to ask George that now when he comes back to see what his thoughts are on that. What else should we talk about while George is not here? Anybody have any questions that they want me to answer in the time being? I guess I could spill the beans on the company that I was going to bring up with the car story. That's up over 200% this year. That I was gonna keep to myself and make you guys stay till then. But I think with all of the technical difficulties we've had so far with the stream, I guess you guys deserve to get that info now if you want it. So the stock that is up over 200% year to date, while a lot of other car companies have struggled, is Carvana. Does that surprise any of you? Are any of you tracking Carvana, trading Carvana, investing in Carvana? It was one of those pandemic darling stocks that went crazy and then got all the way down to under $10 and is now up over 200% year to date. So it's moving like wild, but we'll discuss that in detail when we cover that story and George gets back in here. I see a comment from Chris. Middle East, is oil a good play?
I think we should be good now.
Let's see. Let me make you the big guy. Yeah, it's looking better.
Yeah,
Crystal clear, smooth frames, nice
I
shirt.
don't know what was happening before, but we're good. Sorry for the
Awesome.
hiccup. All right.
Uh,
Now we can, yeah. But I mean, hopefully, I'll give you the short answer of what I would say in the market is like, this is what we expect. We expect volatility, right? And we've been saying prepare for volatility. So I don't see this so much as like a down day as much as just like an expected volatile market being volatile, right? We had a hard day yesterday. We're going to see, we've seen it swing back quickly so many times. So I think, that's kind of what we're dealing with and kind of what we expect to be dealing with. And sometimes that's what makes this market so hard. Like we exited onto yesterday. That was like a tech thing that looked very good in the signals on this weekend and bad on Monday or bad yesterday and just swung in the other direction, right? And we entered into some other what we thought were safer picks, and they zigged when we zagged. So that's the hardest thing in a volatile market, because you never know when it's going to swing back the other way. And yeah, QQQ net option sentiment was staying a little higher, so I could have leaned more tech, and that's why I added app after I kind of made my adjustments yesterday. I was like, I didn't think I had enough tech exposure. But it's a hard market, and even though we zigged a little when the market zagged today, we still only lost like I think like 3% on our annualized returns, and that's just because we're doing a lot to make sure we're hedged one way or the other.
and before I bring up Nike, the first topic I have for you today, I see a question from Chris about the events happening in the world. Is oil a good play to you?
Yeah, I think oil's I think it's been so volatile, like even volatile and it's been down, like energy, oil, the price of oil has been down. But I think, we saw yesterday that you kind of got kind of like two legs to the investment thesis, right? You've got, maybe oil's bottomed out in general, and then you've got if tensions escalate, oil is a good investment. So where it's been a little bit like, I don't really know, like recently, on anything in energy, I think that oil looks to be a good hedge for what's going on right now.
All right, so hopefully that helps you, Chris. And the first stock I want to bring up because they had earnings last night is Nike, which is down. They had mixed results, beating on EPS but missing on revenue. But I think what sent the stock lower was the fact that they pulled their full year guidance, and they said they're going to only guide quarterly from now on. And I think the reason that this happened is because they just got a new CEO, and maybe he's looking to kitchen sink this quarter. Maybe if you could explain why that strategy is used, why when a new CEO comes in, do they kind of want to get all the bad news out right away and then kind of rebuild the company and the culture from there?
I lost you. I lost you for a second. Um, I think we're talking. I think what was basically just about the CEO, right? And if there's
Yeah,
anything new, and them changing, and them basically changing their um, estimates, right?
yeah, the fact that he kind of kitchen sink this quarter. Why would he do that for someone who doesn't know?
In terms of pulling back the full year estimates.
He just removed guidance, so they're just not going to give guidance for a year.
Yeah, I mean, I think, well, we're looking at a few things. I think first we're looking at um, a very tough economic environment potentially, and potentially for retail. We're starting to see that, kind of more and more. So you kind of have that, and I think what ends up happening, especially if you're a new CEO and you inherit things that aren't your estimates, right? You don't kind of want to just rubber stamp anything until you have a better feel for the business yourself, or maybe until you've been able to make some changes that can allow you to maybe forecast better than you'd have to under the current conditions. I don't think that's inherently a concern pulling back. I mean, I think the fact that retail is a concern in general is concerning for Nike, and I don't think the Nike brand is where it's been historically, right? As like the best, brand, and where you'd pay a premium on the stock price. And obviously when you have a change in a CEO, that's kind of reflective of that. But I don't think the change or pulling back the guidance, like I think that's perfectly normal for a new CEO coming in, especially if, they don't really think the last one did the best job. Um, but I would say combined with the fact that you'd expect problems in retail anyway, I think that's more of the concern than the behavior generally.
And in the time you were gone, I was just looking at the Nike stock chart with our chat, and we noticed that over 5 years now, Nike's actually down if you look at the chart. And it kind of is starting to give me warning signs of a chart similar to that of a company that's, a long-standing company in the U.S. of Disney, how Disney is down over like a 10-year period. Do you think Nike's in dangerous territory where they could have a prolonged slump where they're just kind of trading sideways?
Yeah, I mean, the one thing that we always like to remind people is that um, the best single variable in terms of predictability on a longer time frame is 1 year price movement, right? So you can't necessarily disregard those long downward trends, right? Because part of the reason that happens is, algorithms, people, if they see you're down a year, you're much more likely to be down the next year than a company that wasn't down in the last year. So I think, especially when you start stacking the years, or, let's just even say one, the onus is kind of on you to prove that something's going to be different, right? So you need new business plans, you need to roll into a new market, you need a big cost cutting um, initiative, which I would expect the third is what Nike is doing. But we talk about this all the time. It's just like when you talk about something like Disney Plus, that, like, a huge new drain on putting like a cost out there and in building this and driving traffic to it and everything like that. um that's kind of we always talk about it, that's a loss, where just selling your content to other streaming platforms would be a gain. So that is how you get into like a 5 year hole, right? You're already, or a 10 year hole, you're already in the hole, and then you decide to do things like spend more when you could be doing things like earning for your content and getting yourself out of there. So yeah, I think the logical thing for any company to do as they start to get in a hole is cost cutting measures, and that's what I would expect are coming from Nike. And Disney is kind of a different case, because they operate as if they're going to recover, right? That, oh, this is just a bump in the road or whatever. But as you said, 10 years, it's not really smart to do that. And I think they probably could have done a lot of cost cutting, a lot of, like, smarter, high level business moves over the years. And they haven't.
Well, with our next story, I think I'm sharing a company that is under the radar and has to be doing something smart because they're up over 200% year to date. But before we get to that part of the story, uh, what triggered me to find this company is that Tesla reported their vehicle deliveries and they were slightly down, barely missing, but it did weigh on the stock. It was down over 4% at one point today. I was looking through a lot of the car companies and their recent reports, and a lot of them are reporting either slightly missing or just right at expectations of deliveries. And their stocks are like not really doing much. But then this company, Carvana, is up over 200% year to date. And I was wondering, how does that fall in line where all these companies are kind of, barely doing anything, their stocks are barely moving, they're kind of just meeting or missing expectations. And then this one stock, seemingly in the same business, is doing so good. So could you explain that and how you feel about that dynamic?
Well, seemingly in the same business is the key word there. Um, Carvana, one of the things when they were delivering like new cars and had their car vending machines, that's when they were kind of like a punchline. But they've kind of turned into actually one of my favorite stocks, and when I own long term was CarMatch. That CarMax. That was a stock that I covered when I was still in college, but probably working at one of the larger value funds that I worked for. It was a company that was handed to me, and I really got to like their business model. Part of the reason I like their business model is they had a great flow of used cars, right? They would buy any car right there and then turn it around and sell it for more, right? And they had these, they had inventories, kind of these big warehouses, low cost. They built in smart places. But Carvana is kind of like an evolution of that, what it's turned into, right? They've taken that same business model. They'll come to you and buy your car on the spot. And then they have, this used car inventory. So they kind of like created CarMax, but a more convenient version of it, which is always a good way to do business, and shows that they actually had smart management and they weren't the joke that everybody thought they were. But yeah, the one other thing is I looked at this headline that was from Barron's this morning, and I was just like, looked at it, I was like, see, this is why retail investors hate traditional mainstream media, because the headline was Tesla deliveries up 6%. I forgot what it said, but stock is down, right? And they didn't mention the fact that they missed on the deliveries. And to your other point on it, missing is very important, obviously. And I think it's especially important for a company like Tesla that had some, kind of, down quarters relative to where they were. Like them, I'd say both getting a handle on their demand in terms of being able to predict it, as well as just being at like on the upswing and maybe beating. That's what Wall Street cares about. So yeah, I think not a big deal. I exited my Tesla just because I thought it would have actually a harder day than it ended up having. I think it's actually a little above where I exited, but not too far. It was definitely below at some point. But yeah, I thought that part was really funny. But just generally, right? It's always good to be in the game of assets that hold their value better, right? And I think what I'm talking about is used cars, right? When you're in, especially if you're entering in a tough economy, everybody knows new cars, you drive them off the lot, they lose, I think, what, like 20% of their value. I don't know what the punchline is, that, right? So, obviously, not only is buying a new car, you're going to take that hit, right? But you're also used cars retain their value just much better by virtue of you not taking that hit. And then also, like, the earlier years are a bigger decline. If you own a car that's, say, like a Honda Civic that you buy in like the fifth year, maybe like 80,000 miles, like that'll run for a while, but each year after that, it's not going to necessarily lose nearly as much value as even a used car that's 2 years old. And yeah, when you have companies like CarMax and Carvana just like actually doing the vetting for you, and you're not going to like your local used car shop that, might be, selling you a lemon or, whatever. That's like the classic. I'm thinking of like Matilda and her dad. Like, but I think that's like the extreme example of like a used car salesman. But that's not as big of a risk as it was back in the day. So yeah, I think those are definitely important, like general business things, but also just like of how to compare businesses, and then also just funny how some of these headlines work sometimes.
And since we're on the topic of automobiles, I want to spin to this next one, which is a story about Toyota investing in a company that's working on bringing some technology forward. And it's not driving cars, it's flying cars. So Toyota invested $500 million in Joby Aviation. They now own 22% of the company. So that would lead me to believe that Toyota at least believes that this tech is promising to some degree. So So how do you feel about Joby Aviation? Are we going to have flying cars in 2 decades from now or whatever?
Well, it is kind of funny. I think people think of like flying cars as like, oh, maybe it would be fun. But there's no way in hell that there's going to be flying cars without AI, right? They're not going to just let people, like everybody, just like drive around cities in these like flying cars. That would be just like an absolute an absolute disaster. I mean, maybe if you had a like you'd have to go through a ton of licenses, but even then it's like an AI situation, because it's not like when you're driving in like a three-dimensional space. It's a lot harder when things can be coming from above or whatever. But yeah, I've noticed that that company, like for a company with low profitability, its metrics look, they always look pretty good. Upside to downside ratio, net option sentiment looks exciting. A lot of people talking about it, but I'm not sure. This is kind of like what we talk about when we talked about like Meta investing in the metaverse, right? You always want to see, and basically you don't want to be early to this and invest a bunch of money when you're a company like Meta and you can just acquire more proven technologies. I feel like that's how I feel about Joby, you know? And I think kind of when you look at these businesses, right? ASTS is a stock that we like, right? It's also pretty early in its profitability, but that's not all equal, right? Because they just launched some satellites that are perfectly capable of beaming down cell phone signal, right? So they're pretty close to market, even though they're low profitability. And that's the kind of analysis that's essential, right? Joey's not close, not like close to market at all, which is why, if I'm even Toyota, I'm thinking, I'm not sure that's a very good investment, let alone like retail investors. I'm not sure that's a very good investment. I would much rather maybe get less of the upside and see something a lot closer to a viable self-driving car, or a lot closer to self-driving car legislation, right? We don't even have like regular self-driving car legislation. We would need to go many steps further to get to flying car registration, or even like flying car self-driving. So yeah, I don't love it. Even though it's looked decent, I've never even considered it for the trading letter, just because it doesn't match up for me.
Yeah, interesting story. But I want to jump into the world of AI because we got an update on OpenAI, which was in the middle of a funding round, which just closed. Their valuation is currently at $157 billion after they raised 6.6 billion from the likes of Microsoft, Nvidia, SoftBank. Their valuation has skyrocketed. Just last year, it was 29 billion, so now at 157 billion. Kind of insane. They reportedly had 300 million in revenue last month. They expect their sales for 2024 to be 3.4 billion and for 2025 to be 11.6 billion. But all that growth comes at a cost. They're expected to lose $5 billion this year. How does this shake up the landscape of AI, and what does this OpenAI funding round mean for that area of the market?
I mean, doesn't really mean that much. I mean, maybe you look at the valuation, but we don't know enough about like their costs or what their projections really are, that um to say is that valuation good. But it's like OpenAI was never going to be hurting for cash, right? They could basically, like, the only question is valuation, right? There's no shortage of people that want to invest in them. It is very interesting that we've seen a lot of people resign. Their CTO, who's been there for a very long time, who was kind of one of their like public faces. I'd say a lot of the people, we talked about this a few years ago, who were there because it was like a nonprofit. I think that's a lot of their DNA, and a lot of like what brought like the incredible talent that made it. So it's always kind of like interesting now when you look at that. I think the interesting thing to me, especially when you see all these people leaving, right, is maybe the next thing will be what like a lot of people donate their time to, that they actually have a larger belief is going to stay a nonprofit. Maybe they'll be a little wiser, right? Because I do feel like that's the path of technology, right? And one of the things that's kind of in Prospero's DNA, where it's just like I think ultimately the technologies that will win long term are the ones that are doing something genuinely positive, right? So I think, look, they might, and this is the difference. Like, I don't think there there's going to be something that comes along that convinces me to like give up control, where it would just like Prospero would turn into like a profit engine as like OpenAI is doing it, partially because I just don't think longer term, like that is even the best way for it to create the best products, right? So I do think, Sam Altman sold out a little bit. Now, sold out, he could say like, hey, like in his mind, he can control it enough and it's going to do enough good that, the extra capital would have been helpful. Or like we've talked about, maybe the compute was just too high and he wasn't going to be able to do it as a nonprofit or reach as many people as he wanted. So it's tough, but it's one of those interesting relationships between labor and profitability, right? Because a lot of what made OpenAI great was all of these people as a nonprofit willing to work for very little or for free when it started. Um, so you might not be getting more by turning something, into a profit engine. But that's the hard thing, right? Ultimately, OpenAI, any company just has to consume as much data as you can. And, you know, if the compute is just so expensive that it requires, maybe that is a deal that had to be made. We can speculate all we want, but without looking at the numbers, I don't know. But I do think there was probably a path where he could have gotten some funding and keep it more, kind of for good than the path that's ultimately been chosen. So it will be super interesting to see if something kind of more like true open source comes along that's a better alternative. This really opens the door for it. I'd say, especially like a lot of the like original talent leaving. I think that sends a message to other engineers there that there's not good things going on.
Yeah, it's a little wild, but I think Meta is honestly doing the most open source in that space, which would kind of surprise a lot of people. And you brought up the data that ChatGPT and OpenAI have, and I thought this story was kind of building on the one we just covered, and it was interesting how Amazon actually is urging their employees to not use ChatGPT. They're scared that if they're using it for important things that are going on within the company, that data can then be used and it's not private anymore. They actually created their own AI chatbot, Cedric, off of their Bedrock AI platform combined with Anthropic's Claude. So do you think this is kind of like a bear case for OpenAI if their software or AI isn't used within other companies and maybe it's more of just like for people and it's not a, what's the word for it? Um, Whatever. But is this a bear case for OpenAI?
I mean, it is something that people are going to become more and more concerned about, right? And I'd say, especially as, I think right now it's like a lot of people that are using, in OpenAI individually, right? But I think as the industry matures, there'll be much more B2B. For as an example, like finance people can't use OpenAI for the most part, or they're not allowed. I don't know if some people like get around it by using like personal computers or whatever. But like for finance, data privacy is paramount. So that's not something that is something that already I would say doesn't work that well for that. So yeah, it's gonna, I think, become more and more of an issue. And yeah, like Amazon, kind of firing this first shot, it makes a lot of sense. It might, there might be a lot of companies, especially large companies, that turn to, like you're talking about, Meta and Llama, right? The better and better they make that technology, and OpenAI obviously had a huge head start, but Meta's got a lot of money, right? And if there's a talent drain coming from OpenAI, perhaps that is something that the open source project at Meta can catch up. And then, that's what people would be more inclined to use, because you can grab that code base and obviously use it on your internal things. Like, there's few, if any, chat implementations or LLM implementations that I know right now that aren't being built in parallel in Llama, or another open source, but Llama being, kind of the primary one. So yeah, I mean, we certainly could see that, or internal implementations built on Llama, or just, kind of a move away from LLMs to, what could also come around more is like more targeted agent based behavior, right? So like, instead of your employees using chat GPT to build like marketing reports or this or that, you could have companies building more custom agents, right, to support their marketing teams, right? So those marketing teams don't have to use them to make marketing plans or make copy or things like that. So yeah, I don't think Chat GPT has won yet. Especially because like one of the things I've started to use like Superhuman email, and that has like an embedded AI feature. Now I don't know what they're using underneath that. It could be Chat GPT. But yeah, the game is very much not over, and I think people are going to care more and more about privacy, which you don't get with OpenAI.
Just a quick follow up on this before we do our switch over is, do you know if like the ChatGPT terms of service is that they can use all your data, or are companies kind of just assuming that they're doing that whether they're saying it or not?
I've got no idea. And see,
Mm-hmm.
that's like why, like, it's, I mean, the hard thing about these terms of services, I could go on a whole other rant on that. But the hard thing about these terms of services is like a lot of them are very, very long, and you don't really have time to read everything. So yeah, that can be very tough.
Nobody ever reads anything of those. They just scroll down to the
I,
bottom.
Yeah,
That's
exactly. I do think eventually, I mean, like, we're ever going to have good legislation on anything, but there should be a requirement to have like a reasonable readable limit, right? Because like some of these places have like, I think like Apple has like hundreds of pages. It's like nobody could possibly read that, right? And it's just like to use like iTunes or like, it's crazy. It doesn't make any sense.
So here's an idea. We build an AI chatbot that reads the term of service and gives you the important parts, the bullet points. But that's just whatever. Are
Well,
we
what
ready
if
to do our
that's
switch
like
over?
what if that's a scam? What if that's a scam too? Like I don't like I'd rather say I didn't read it and have that in court than be like I had like, oh, like I had my AI assistant review it. You can be
Yeah,
more culpable then.
indeed. We'll see you on the other side in the Prospero.Ai lab, and we'll do the model portfolio update. There was one topic that I didn't get to bring up because we ran out of time today, but I'll just share with you guys now. It was about Google. And if you joined the stream late, I kind of said this in the beginning, but a lot on the streams, we mentioned about how Google seemingly has the best AI technology, but they have not been able to productize it well. Seems like they've kind of maybe realized that themselves and are making moves. So they acquired a startup company called Character.Ai, and they're going to be licensing their chatbots and their startup models. In total, it cost them 2.7 billion. But what's funny about the story is Character.Ai's founder and CEO Noam Shazier was actually a member of Google's DeepMind, and he left them in 2021 over disagreements. But he's back with them now. They got their talent back. It cost them a pretty penny, a couple billion, but seems like they're taking steps forward to get their AI right. But what's going to happen right now, if you are not a usual viewer of the stream and don't know, is George is going to join us again, and he's going to make live moves. So you'll get to see what's usually in our paid for letters, but you'll get to see it for free if you stick on with the stream. And he's going to make some updates to our model portfolio. But I want to check in now on the QQQ and the SPY to see where they are at this time. All right, so the QQQ is at 53, and the SPY is at 40.
A
What does
little
that
better.
say to you, George? Little in between?
Yeah. Yeah, I mean, SPY has been very volatile. That's been very, like,
You wouldn't expect that, right? You expect QQQ to be more than SPY?
I mean, typically, I mean, either of them could really be volatile.
Mm-hmm.
But, all right, let's see. We're getting everything ready here. All right. God, I haven't had enough time to do this lately. Okay. Let's share. Sharing is caring. Oh, we got to get this. Oh. All right. Refresh. You might not want that right this second. All right, so let's see. And you said 53 and 40.
Okay, so SPY volatility makes me nervous about the market as a whole, but perhaps we should have stayed more weighted to tech to capitalize on today. We're going to lean a little more into tech. Nothing stands out other than energy might be looking like an increasingly safe play. And consumer discretionary and defensive are both weakening. Along with real estate, sending a message that market may be increasingly concerned about consumer spending. Looks like there's an appetite for growth today, which is not surprising given the tech move up alongside. Nonetheless, we will have to see a continuation before we lean too much into growth.
Okay. There we go. Did this. Okay. Steven, you're still there, right? It's very quiet.
Yeah, I'm still here.
Well, Steven and audience, I guess. Well, if you're there, I'm going to assume we got audience too.
Oh yeah, we've had 1,200 people in the stream today.
What's
Thanks,
looking good?
thanks our audience.
BILI. Can you tell me about the net options trend on BILI? Interesting. I've never heard of it.
That's a Chinese stock, I'm pretty sure.
Oh, all right. Not surprising. Yep. Look at all this China stuff. Well, we got some China already, but maybe
Clear
we'll...
uptrend up to 79 in net options for Billy.
I mean, how are we gonna? I feel like the second I jump in on this China trend on the investing side, it's gonna turn around on me.
It has been a ferocious rally.
And for whatever reason, Las Vegas Sands. Like,
I know why.
it's like, why?
They either own or have a large part of Macau, which is a Chinese like
Oh,
large resort.
damn. Talk to me about the CN net option sentiment. I don't know there, but
What's the ticker?
CIEN.
Oh, I got it. Yep. Okay, so it is at 80 currently, but it's kind of been steady between like high 60s, low 80s for the whole trend now.
Oops. All small caps. Not necessarily need too many bears. All right, that looks good. All right. Going heavy long China, I guess.
Famous last words.
I know. Well, I mean, we gotta trust the signals.
Mm-hmm.
All right. Getting out. Just like it here. Okay. What's going on with VST? I know. I gotta get in though. All right, gotta do those two clearly. All right, that's all done. Oh wait, I wanted to look at one more thing. Okay, now I need. I wonder how many people stay for.
On YouTube, we usually hover about like, if we peak at like 20, it'll drop to like 10. On Twitter, I'm not sure.
For the riveting. Right, that all looks good. And then what was the other one? I'll add a few. Do I hold on to TMDX? Let's back up. Give it one more day. Okay. Okay, we're done.
All right. Thanks to everybody for tuning into the stream. Had fun talking about the topics. Thank you, George. See everybody back here Monday, 11 a.m.
Bye.